following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, your bi-weekly source for all things options related, a little bit of options wit, a little bit of options wisdom, throw in a dash of analysis, a little bit of unusual activity, and then mix it all up together in the old Blizzard machine, throw in the cherry on top, and you have the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as from a little thing we like to refer to around these parts as the old Options Insider Radio Network. A crazy beast that is growing every time I talk to you listeners. We love it. Thank you so much for continuing to tune in to all of our fine programs here. Looking forward to launching that Futures Option show really, really soon. It's in the final stretches, listeners. I promise you. And of course, joining me on the old show today, we have a great panel. Starting off, we're going to mix it up today. Bring on the new guy first. He is the major domo over there at RCM from a futures perspective. He's the man to talk to when you want to talk about the lines in the sand for various commodities. He is Matthew Bradbard, the futures go-to guy over there at RCM Asset Management. Matthew, welcome back to the show, sir.
Glad to be here. Yeah, you keep introducing me as the guy down in Miami, and I'm going to go out on a limb here, and this is my first public announcement that I believe I will be moving to Chicago inside of 60 days. A lot of people go from Chicago to Miami. I'm switching it up a little and relocating up to RCM headquarters. The plan is to be up there in October.
Oh, well,
that sucks. Oh, man.
We can do the show locally.
I didn't exactly time that right.
That's just, there's nothing good about Miami to Chicago. I live in Chicago. Great town, though. Great town, don't get me wrong.
Matthew, we look forward to having you.
Yes, I'm looking forward to it, I think. I probably don't, come January, I don't know how, good of a decision I think I made, but it's official.
Well, your timing is a little bit suspect, I suppose, because in 60 days we'll be getting into the fall. It might be a little bit of a seasonal shock for you when you get up here. But actually, the last couple of years it has been very temperate here in the summer, in the wintertime. Temperatures hitting into the 70s in like March and stuff. So the notion of the old all-encompassing Chicago blizzard from October to March is a little bit antiquated these days. We have maybe one or two good dustings a year, and the rest of it is pretty manageable for the most part. So I don't think it will be as big of a weather shock as you anticipate.
I was born and raised in Boston, but I've been down here for 11 years, so my blood is thin.
Your blood has thinned. I don't know if you can handle it right away, but you'll get accustomed to it once again. Pick out some fine winter jackets, and you'll be all set, sir. All right, speaking of fine winter jackets, a man who has no shortage of those next to his collection of fine and fashionable hats. You know him, you love him as the Viceroy from Options Express. Mr. Alex Jacobson, welcome back to the show, sir.
Hey, Mark. Good to be back today. Another up day, but the market looks like it's starting to kind of grind in this kind of unchanged range. But a lot of interesting stuff going on today.
Yeah, a lot of good stuff cooking. And before we get to that, let's introduce our last cohort partner in crime. You know him as the Rock Lobster, beaming in all the way from sunny and scenic Maine, where he is kind enough to forego his golfing for an hour to come on the old option block. Mr. Andrew Giovinazzi from OptionPit.com. Andrew, welcome back to the show to you as well.
Sorry, I was in the wrong place. I thought I was playing golf in my mind for a second. I was playing that mental golf. I am well, sir. Thank you for having me back. It's always a pleasure to be on the Option Insider Radio Network. Always.
All right, and with the team assembled, we're going to dive right into the trading block.
The trading block.
All right, and welcome to the old trading block. This is, of course, where we tell you what was catching our eye, what was lighting up our own screens, and catching our interest today on the street. And then continuing in the spirit of mixing things up, we're going to mix things up a little bit again today. Typically, we dive into what was moving on the broad indices, but since Matthew is here and kind enough to bring all of his fun futures knowledge to the market, maybe we'll start there and turn things on its head a little bit. Matthew, what really caught your eye over there in the commodity and futures options land today?
It's a great question. I actually got something right today. I did my chart of the day this morning at about, I think I published it at 10:15 Eastern time, so about 30 minutes before the natural gas number. And I didn't get the number right, but I got the market right in terms of, I think natural gas is a buy down here. It's trading, we made a 2013 low today, and then we had a 6% reversal. The volumes for the last couple weeks have been front month futures. We've been doing about 75,000 contracts a day. We did over 200,000 today. Bullish engulfing candle. That, I think, was the most significant move that will affect me. And then outside of that, we're doing some stuff in the coffee market. We may have a potential freeze down in Brazil again. There was a false alarm about 3 weeks ago. Supposedly, we may get a freeze on Sunday. So, we're playing in natural gas and coffee with clients. I do not have exposure in the metals, but certainly I pay attention, and they caught my eye. You had a reversal. The metals market looked like it was moving lower yesterday. It reversed, and you saw some follow through today with gold up 2%, silver up 4%. I don't trade platinum. Platinum's at a 3-month high, but those are really the major movers that caught my attention today.
Yeah, I'm looking at your newsletter for today, and you titled it "Wear Gloves When Catching a Falling Knife in Natural Gas." It looks like you had some well-timed commentary this morning on the old Nat Gas realm. So well done, sir.
They say a broken clock is right twice a day, right, Mark?
Hopefully we're right at least 3 times a day, and then we can beat the old broken clock average. Is what we aspire to here at the old Options Insider and on our old radio network. But yeah, interesting stuff kicking around over there. There's so many things cooking in the marketplace these days. It's hard to know where to begin. But futures, of course, being a growing part of the interest for our audience. So of course we like to start there whenever we can. Of course, in the broad indices today, it was a pretty much up day across the board. Most of the major indices closing up about 0.5% or so on the old day-to-day. VIX cash closing down commensurately, down about 1/4 point as well. And coming on into the after hours, before we even get into the after hours, where to begin? I think the beast that cannot, I've joked before that it cannot have a down day. Well, it certainly proved me right again yesterday going through earnings. Tesla just exploding out of their earnings last night in the after hours and finishing the day today up another 14.3% or nearly 20 handles to 153.48. This is the thing that just crossed the century mark not a few weeks ago, maybe a month ago, and now we're already talking 150. I mean, this ride for Tesla has been, I think, ridiculous is charitable at this point. Andrew, a lot of your clients out there playing in Tesla, are they watching it, or is this just too crazy even for them?
No, actually, Marcus hated it. He hated it early, and then he stayed away from it. Actually, I've had clients do really well on it. So overall, they have been I know it's going to be hard to, where's that volatility guy, Schlesinger? But we have like a lot of kind of like double butterfly strategies, ratio call spreads, just basically kind of being long it when it moves in either direction. And the moves are so big that it makes those type of trades work. So actually, for the most part, a lot of successful client activity in there. So yes.
A double butterfly, is that like twice the guts or twice the wings, or what is that?
No, what you do is you set up an out of the money fly when there was crazy skew in there. So you could buy an out of the money call fly for, let's say, like $1.50 that had 20 points between the wings or something like that. And it was $10 out of the money, and you bought the same put fly similar to that. So the thing with Tesla is it just doesn't kind of sit around, you know? And one fly would go out worthless, the other fly would be worth $6. And then as a strategy, it works pretty well. So you never know where it's going to go.
I see what you're getting. You're getting both sides of the spectrum there with your double fly. Very interesting.
Right, and it's just you're trying to reduce the dollars you have to put into it, and you pick up a delta sooner or later once Tesla just does what it does, which is move in a direction.
Of course, you only really needed to be one direction over the past month or so, and you were doing all right. If you were biased to the upside, you were doing all right.
Right. So there was plenty for everybody in Tesla, let's just say, and and the evaluation of the company. I mean, how many times have we seen this mark over and over and over again? And you could be Amazon and totally defy that.
Yeah, right? and use your largesse to buy dying industries like the Washington Post and dying companies. So yeah, you're right. Amazon is probably the poster child for continuing to really never make money and yet continuing to exist and thrive and rally. So yeah, they're probably a good example of exactly what you're talking about. Mr. Alex, I'm sure Tesla was lighting up the old boards at OX today as well.
Yeah, and it's interesting because yesterday, going into their earnings, even the desk was trading it for some of their own accounts. So there's just no getting your arms around this. This is just a classic option stock. It's got enough risk in it that I don't think you want to own the underlying. And as Andrew pointed out, there's lots of option strategies you can do. This kind of reminds me of the United Airlines 1989, and again, I'm dating myself, where United wasn't called United back then, I forget, but it was the reincarnation, and the thing would move 10, 12, 15 points a day, and it was a great trader for customers. It was a difficult name to be a market maker in for kind of obvious reasons. I think that's the same case in Tesla right here. It's just a great name to get creative in. It's been a great name in simple strategies too. Simply, just buying out of the money stuff, or buying straddles, or strangles in it, or spreading it off. But it's just amazing. And I come back to my nephew, the VC, who has one, who just loves it, and his contemporaries are all in line to get him. So, valuation doesn't have to make sense. Amazon's valuation hasn't made sense for a long while, but it took out $300 this year, and you're really looking at future earnings and future opportunity. I read a report the other day that, GM's market value is about $15,000 a car. Tesla's is $750,000 a car. So you say it's got 50 times the leverage that General Motors has in its core business, and you kind of scratch your head and say they're going to have to sell a lot more than 5,000 cars. That NUMMI plant that they took over in Fremont is going to have to start kicking out cars at the rate that Toyota kicks out cars. So it's interesting to watch, but it's a fun animal to trade.
And speaking of other names that blew past their expectations last night in the after hours, and Matthew, this is a good one for you because if you're moving to Chicago, you have to catch up on all the local companies, and of course Groupon, one of the largest, reporting last night, and they're another one just off to the races, up about closing today, up nearly 22% or nearly two handles to $10.60. And Alex, it doesn't seem like that long ago, and I was checking on my charts just now, that we were giving Grigas just the hardest of hard times here on this show when Groupon was languishing around the 2 to 3 handle back in November and December of last year, and he had legged in around the 5 level, I recall. I think he was writing puts on the 5 strike and got assigned, and we gave him no end of grief all the way down as it went down to 4 and to 3, and that poor guy paid for those 2 points many, many times over on this show. I'm glad to hear he's finally out, and he's probably got a big smile. He's the winner at the end of the day. All that grief he took was worthwhile, apparently.
Yeah, I went by today and said, I know it's going to come up on the show, and he goes, I'm out, but I can't quote his rate of return, but his rate of return was impressive. But he was a little bit of angst when he said, "But I am out." So
he's like, "Leave me alone on this one."
Yeah, like kind of all of us. Our would have, should have account is doing better than we're doing, but he did okay in it.
Yeah, same thing. We were debating on this show endlessly whether the 18 puts were a smart sale in Facebook, and here we are looking, 38, 20 handles north of that level. So sometimes these names can surprise you, and Groupon being a great example of that. Everyone seemed like they were on the ropes, changing CEOs. Everyone was encroaching on their business model. Didn't seem like a very viable long-term prospect, and yet here we are, 5 handles to the north of that. So something clearly is going well. And there you go, Matt, a little prep for some Chicago company when you come up here, when you get all your great local deals coming out of Miami. Of course, there are some actual earnings, I should say, tonight as well, including a name we were chatting about earlier on the show and on the website, which is, of course, Dendrion, ticker symbol DNDN. They are reporting right now after the close.
$4.
The NSA.
There we go. Yeah, the NSA is on it.
$4.
Yeah, Dendrion closing today. He had been dancing, flirting with the 5 level today. Got around 480, and then it closed down a little bit from there to like 460. And then the after hours, like the earnings came out, and it's hovering around that 4 strike now. So we had talked a lot about this name and the various activity we've seen leading up to it over the past few weeks. Back on July 31st, we talked about paper coming in and trading about 5,000 of the AUG5 puts for 84 cents. In one massive block. At the time, it looked like closing sales. Someone was taking his long put money and running. And then we also talked about some people buying some calls in here before. So there's been a lot of paper across the board in DNDN. I believe it was pretty active at OX over the past week as well. Correct, Alex?
Yeah, we had a lot of activity in it. You know what else kept us busy today? I mean, I don't want to take you off topic here, but it was the Apple going X today, and I kind of in hindsight wish we talked about it on Monday's show, but Apple went X $3 today, and every in-the-money call below the August 465 got exercised. We'd sent out emails alerting customers to the possibility, but it still was sort of a busy day trying to explain what had happened to a lot of the accounts who came in and found that their in-the-money calls had been exercised.
Yeah, you're right. That is a good little warning to let people know. In the past, we've talked about div plays a lot on this show. I think we're hoping that the changes OCC has recently made to their exercise thresholds and how you have to now be net long on a strike. You can't just go out there and blast out a ton of wash trades and then exercise one leg and hope you skate on the other. They're actually trying to crack down on that. It seems like it's being relatively effective. I think div trades only accounted for about 1% of overall industry volume in July, so that's lower than we might typically see. Which is good. Sometimes it can be up to 4 or 5%, so that I guess is a sign. It still exists, obviously. And I'm not sure if they've done all the full implementation of that change or not yet. Might still be more to come on that, but it's interesting to see the ramifications of that as going forward. And of course, if we had thought about it for Apple coming out prior to XDiv, we talked a lot about dividend plays on the show in the past. Hopefully, our listeners are well armed going into trades like that these days. One other one kicking around here. Uncle Mike is in here, so this is for the odd block. I'm sorry, for the around the block. So I'll just skip that part, Kyle. We can cut that. But there is another one coming out after the block today. After the block. I got blocks on the brain today. There is another name reporting today after the bell here. This is NVIDIA. We talked about them on a show a couple of weeks ago. They closed today $14.70, up about a dime, trading roughly unched, maybe a little bit higher actually in the after hours right now. NVIDIA, an interesting name to watch. If you weren't a hardcore trader or perhaps a hardcore gamer, you weren't really that cognizant of what they did because they made hardcore graphics hardware, and that was pretty much what the two audiences who were after that, traders who needed multiple screens and gamers who wanted very high-end graphics. If you weren't in either of those two demographics, then you probably weren't that familiar with NVIDIA, but we've seen NVIDIA, like a lot of other companies in the area, see, the success of firms like Apple and get a lot of consumer electronics envy. Dell has tried this as well, trying to make MP3 players and all these other consumer electronic devices with middling success. NVIDIA now launching their own line of handhelds and portables, in addition to obviously making all the processor chips for a lot of the smartphones and things that you use. So interesting to see how their forecast going forward for things like the NVIDIA Shield, which is their own brand new kind of, looks like portable graphics gaming tablet hardware thing, how that is looking and shaping up in the marketplace and how that will affect them going forward, and whether they can make the transition into the consumer electronics juggernaut that they clearly want to be. This 14.5 straddle here, they have weekly, so let's look at the weekly 14.5 straddle. They're went out at about 70 cents, actually 80 cents, so they're expecting a little bit of a move. Right now it's roughly unched in the after hours, so we'll see if we get any more bang for our buck in that one. And since we're talking about tech, we might as well keep on rolling right on into this crazy trade in Microsoft here in the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, dear listeners, hope you got your fedora on, because it is time for the Odd Block. This is, of course, the portion of the program where we break down the interesting and or the unusual options activity that's catching our attention on today's trading session. And there's one name, and kind of one name only, that dominated a lot of the conversation today when you're talking about unusual activity. This is Microsoft. Good old softy MSFT, closing today $32.89. Up a whopping 2.5% on the day, or 83 cents. So there has been some life here in Softy. We've denigrated them in years past on this show as kind of being a big resounding meh whenever they report earnings or anything else, and being one of the more reliable premium sales in the marketplace. That has kind of gone by the wayside over the past 6 months or so, as his name has actually started moving, showing some signs of life, showing some movement post and pre-earnings, and even in between, days like today, up at 2.5% today. So the ball is starting to creep back into Microsoft, and the activity is starting to creep back into Microsoft as well. So the name has been averaging of late 180,000 contracts a day. That's a fairly decent clip for Microsoft of late. So that already has some of that inflation built into that ADV. And then factor in what we saw today, where they hit nearly 700,000 contracts going up total today. So just insane volume and insane trades going up here in Microsoft. I think we'll start with just the biggest by just many orders of magnitude. I remember I said Microsoft closing today up about 2.5% to 32.89. Someone saying that's not far enough for me. I'm loving these SEP 35s. They went up 185,000 times today. Listen, I said that right. 185,000 times total. 150,000 in one big block for 14 cents. Another 35,000 and change going up at scattered prices. They went up for 14 cents and closed at 28. So this guy's already doubled his money just in one session. So this is very, very well-timed paper, to say the least. Mr. Andrew, let's start here on these SEP 35s, because this is just crazy business. Would you concur?
I would concur that it is crazy business. I actually had to do a little digging on this more, because it did trade out of sequence this morning. And just for this radio show, I actually got a little info from some contacts, just seeing where was it buy side, and it was just because it's still trading on a listed exchange, and if you dig around, I know some people you can find it, but went up as, I think, customer buying basically. So that's the long and the short of that. On the heels of all the paper that we saw the other day, unbelievable.
You're right. You're referring to a lot of call buying we saw earlier. In fact, just yesterday, we haven't had a chance to chat about it on the show. Obviously, it was an off-show day, but in addition to this mammoth buy, and you didn't see any stock going up or anything with this. I mean, this is clearly just a buy, looks like, from all intents and purposes. Only 15,000 contracts open on this strike, so opening paper, even if it was 185,000, it's going to be opening on something. So
some of it has to be open.
Yeah, something's got to be opening somewhere with 185,000 contract. That's pretty much the entire ADV for Microsoft on one trade and one strike. So there you go. And there's other stuff going up like crazy. But let's just get into it really quick because it kind of fills in the narrative a little bit here. We also saw yesterday the AUG 32s and the weeklies, and these are clearly very, very short-term contracts. Only a few days left to go. 1 day now. These were purchased yesterday 14,000 times for around 6 cents. That was another well-timed trade because those calls are trading nearly $1.90 right now as well. So this guy has done fairly well as well, pouring into 2-day options and quadrupling his money or more so in the same amount of time. We saw someone coming in today. Looks like they were blasting out about the same amount, maybe a little bit more of the AUG 33s. It couldn't really tell. It was mixed paper. Some of it was buying, some of it was selling. Couldn't tell if this guy was just rolling from his 32s and trying to leg into a free spread, which would seem kind of silly with the weekly now daily. Just take it off the paper, take it off the books, and take your money.
Keep it or roll it.
Yeah.
Roll it to the next month or something.
Yeah, rolling it up a vertical and another weekly / daily doesn't really make much sense, but that's some of the paper we saw going up today, which was crazy. Of course, I know if you dig it a little, you said paper buying, which is interesting because I dug a little more back in those SEP 135s myself as well, and that kind of gets in some of the weird things we've talked about on this show, and of course in our event a month or so back about unusual activity and kind of how these trading tags, these conditional tags that go up in time and sales, and kind of how dubious they are. Because if you pour around in time and sales here on a lot of these SEP 35s, it looks like a block of 99,999 and then about 46,000 separately both went up, marked as sold last for 14 cents as well. So who knows if that's trying to scratch a trade or that's just nonsense. That's really why I tell people a lot of times when they see that when they hang a lot on the conditional trade tags there in the time and sales that they really need to dig a little deeper usually.
Correct. And that's still, I can't think of any reason why it just, again, buying paper, vol exploded. It has all of the smells of purchase. Because if the liquidity providers bought 160,000 of those, the volatility would be up one blip today.
Yeah, exactly. So, and of course, there's nothing to naysay this guy's bet here. I mean, the stock has run from 29 all the way up to got over the 36 handle at one point back in July. So this guy, if he's right on the 35 strike, he's betting the right way of the train again, that there's a lot more ahead for Microsoft, apparently thinking maybe sales of Windows 8 or who knows, maybe the new Xbox.
I think this is all due to customers are really digging the upgraded Windows 8.1. That's fixed a lot of the customer complaints, and a big part of the Microsoft drop, my own Microsoft full disclosure stuff, but was people didn't like the new Windows 8 or whatever, and they went and fixed it. Now people like it, and I think a big part of the drop was everybody's the new operating system sucks and nobody's going to buy it. So maybe, if they actually start to generate some real sales with all these goodies, tie in their phone and Surface, blah, 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 all of a sudden, they might be able to make even more money than they already do.
They might have something there. Who'd have thunk that the start button could be worth so much money? Bringing back the start button and everyone goes crazy and buys 185,000 calls.
Hey, sometimes it's that easy.
Yes. I heard they're bringing back Microsoft Bob too, so there we go. Maybe we'll get another 200,000 tomorrow. This Microsoft. This is kind of getting kind of interesting out there again. This is, I spent some time out in the Microsoft pit a little bit before I left the floor, and this is starting to get a little more reminiscent of those days again. You're getting some movement, you're getting some volatility, you're getting some actual paper, some actual trading, as opposed to just kind of the languishing beast it has been for the past decade. This might actually open my eyes to actually want to come play in Microsoft again, and maybe some of our listeners as well who have just written it off for years in favor of the Teslas and the Netflix and the other sexier names that tend to move around a little bit more and also perhaps wipe out more people in the process as well, but still a little bit sexier for a lot of our listeners. Perhaps Microsoft finally getting back into the sexy options trading camp. We'll keep an eye on them and let you know. But yeah, these calls at the very least, particularly the ones we've highlighted yesterday and the day before on the site, check them out, theoptionsinsider.com. Just click on the unusual activity tab, or you can type Microsoft into the search bar. It'll bring all that up for you. You can see there's been a lot of well-timed action out here of late, and certainly enough to make you stroke your chin and say, And speaking of whom, we're also going to keep on rolling right on into Freeport-McMoRan Copper and Gold Inc., ticker symbol FCX. This one closed $30.80, up about 5% today, so a good day for them, up about $1.40 on the day. This is the name that does, about 55,000 contracts. So from an odd block perspective, that's huge paper. It's huge size. We talk about names that do 200 contracts a day, so that's size. They did a 3x that and more, 161,000 contracts today in good old FCX. In particular, a lot of the love was focused today on the AUG 30s, coming in for about $1. This was a buy right, so of course when you're doing buy right, that's tied to stock. And looks like it's someone unwinding this buy right position. Let's see what the total here for these AUG 30s on the day was. They went up a total of 32,000 times. Of course, you're right. There's 39,000 open on this strike. So looks like someone's unwinding a covered call / buy right position that they had on earlier for some pretty substantial size. Nearly 40,000 contracts, the bulk of it coming off today. Total of 32,000 with a block of 6,000 going up this morning. Intriguing stuff here in good old FCX, wouldn't you say, Mr. Andrew?
Yeah, I thought, this was some savvy person, bought some stocks, sold the high vol, came up. I think this was definitely a big winner. And looking at this sector is starting to get interesting, this gold sector again. Everybody is totally written off gold. Written off the fact that it could go up, emerging markets are in the tank, everything's awful, there'll be no more demand for any goods anymore ever. And, you even have a stock like this, it's only $4 off the, 5-year low, I think, since the financial crisis. So I think let's just call it a very intriguing trade for this name. And, the buy right type of strategy, it's not like the company doesn't make money. So I think, at 12 times earnings, it doesn't look like too bad of a stock, but I like the buy right, that type of trade in here. I don't see a tremendous amount of downside, in a name like this at this point, especially when it just come off such a low level. So
yeah, this thing has danced as recently as in the last couple of years, up as high as $48. Got back up there again back in January of 2012, so about a little year and 3/4 ago. So yeah, it has some room to the upside to run, and it's been kind of languishing here on the downside of that range. Got as low as about 26 handle over the past couple of years. Yeah, so it looks like this guy there was expecting some upside and now is taking off that position. And before we keep going, Matt, I hate to exclude you, so if you want to, if there's anything, any futures or futures options activity that maybe caught your eye, you might want to highlight, we could certainly do that now if you'd like to do that, or I can just keep going. Your call?
I was just curious. I mean, I pay attention to some of these stocks and ETFs that are supposedly correlated to commodities, but the fact that gold has moved 10% higher in the last 5 weeks, and copper is like 7% in the last 2 weeks, and it broke out today. Does that lead Freeport, or does Freeport lead that? Or is there any correlation? You guys have an opinion on that?
I think the commodity leads the stock to some degree. Now, these guys don't hedge, I guess, as much as they used to. So any lift now in gold prices probably would help, because obviously if they didn't hedge at $1,600, because they all got burned when you had the big run up, so they stopped. It doesn't work as well on the downside, which is why I think everybody, why they get crushed so bad. Because if they're hedged, why would they get crushed so bad, right? So the fact that they could have, earnings power going the other way is. So I think you're right. I think it's the commodity sort of wags the dog here to the extent that the firms still are hedging.
It is amazing to me how many firms, we talk all the time, we land-based financial advisors and big pension funds and other areas that don't hedge and use options effectively, but it is amazing to me how many firms like FCX or like the airlines that have significant exposure to a particular commodity, could be oil, could be metals, could be what have you, and have minuscule, if no hedging efforts whatsoever. Remember back in the big oil boom a few years back when we saw so many people, the CEOs of airlines, writing open letters saying no one should be able to trade futures except for them because they were the end users, and these speculators were driving it all up. It's because they hadn't hedged only Southwest had actually hedged their exposure and they were able to do all right. It's amazing to me. You can run a massive corporation like this, or airlines or any others that have significant exposure to one commodity risk, and for whatever reason, ignorance or cost savings or whatever, they don't actively hedge that risk. It amazes me. And that should almost, you think, would be a violation of your fiduciary responsibility. If you roll in as a CEO of an airline, you got pretty much one thing on your mind. That's oil prices.
Well, at this stage of the game, I mean, I think you got to step your game up a little bit.
You'd think, and yet, we haven't seen that much, and that's why Matt's question about FCX is kind of interesting. It would be even more interesting, perhaps, if FCX kind of wagged the commodity dog a little bit, but I guess we're not seeing as much of that. That would be kind of fun, though. That would feed the tinfoil hat crowd to an interesting degree.
But the last 3-4 days in FCX has been a big, pretty big run up, for sure.
Now, Matt, obviously, you guys mostly delve in the futures. Do you ever have a client also say, hey, I'd like some exposure in some of the industry types as well, and maybe you allocate a little bit towards an FCX as well?
Me, myself, I don't, but RCM does. I mean, on the RIA side all the time, and I had clients that I talked to that, trade their commodities with me, and, maybe they didn't want to buy corn ahead of a USDA report, but they're happily buying DBA or a lot of these ag ETFs or... most of the guys that I trade with that trade ETFs absolutely have an opinion on gold and silver, and they're always trading GLD and SLV.
Yeah, that's kind of what keeps USO in business. I know we slammed on it before on the show, but it's kind of the catch-all play for energy. It's kind of an industry as well as the futures. It's kind of a massive potpourri of energy nonsense for the most part. But yeah, it keeps it floating because people want that exposure and they like to go into a big broad name like that. Well, good question, Matthew, and thank you for that. Andrew, you can take off your... I almost said tinfoil hat. You can take off your fedora or your tinfoil hat, whatever you're wearing over there if you're getting into conspiracy land.
The fedora covers the tinfoil.
I see how it works. So you can have two things going at the same time. I should try that. I can cover up my conspiracy-minded nature.
The foil covers the propeller head hat. So it's a multiple... when you're in an option education business, you have to wear many, many hats.
Yes. I like it. Way to bring it all back, sir. I like it. And speaking of a man with many hats, many stylish hats, it is time once again for the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, listeners, twice a week we get a very, very special peek behind the curtain into the land known as Options Express. And our tour guide for that special peek, that special tour, is one Alex Jacobson. Mr. Alex, what have you in store for our listeners today on your special tour, sir?
So today, the peek under the curtain, love that lead-in, Mark, is going to be talking about the WalkLimit feature, which we've talked a lot about, and then we've had questions from listeners. One of the questions we had a couple weeks ago was, when would WalkLimit be available for single leg option transactions? And just to do a quick refresh for people, WalkLimit is a product we introduced 7 or 8 months ago that essentially lets you automatically, electronically try to enter spread trades between the NBBO and then works the trade for you. Now, when I say works the trade, it adjusts. If you're trying to sell for credit, it adjusts the limit, and you can set your levels of adjustment and your time of adjustment. In fact, the meeting I was in this morning, in the first 4 days of August, customers who used WalkLimits saved on average $100,000 a day over the NBBO. $400,000 in the first 4 trading days of August, and it's an amazing tool. I mean, I've been in this industry a long time, and this intuitively does what we all do. It kind of tries to trade between the market, works the order. I'm surprised a competitor hasn't cloned it yet. It is one of the things that the technology folks at Schwab are trying to rapidly port over to their platform. But it's just such an intuitive, clever tool. It's so intuitive and clever that every webinar we do in this place, no matter what the topic is, we now put 10 minutes of WalkLimit in it, because I hate to say it's such a joy to demo, but it's such a joy to demo, and especially when you're demoing anything involving spreads. But the second piece of news over the 100,000 a day is the product development team has developed the single leg, and a lot of people who ask about single legs say, well, how are you going to avoid cancellation fees? And we figured out a way to do it. I'm obviously not going to discuss the secret sauce here, but single leg should be enabled in all domestic accounts the week after regular way August expiration. So something like the 19th, 20th, 21st of August, that fourth week of the
great,
month.
that soon. I thought it was going to be take longer. That's fantastic. And I think that listener who wrote in with that question, that was just a perfect use case for why that's such a great tool. I mean, a lot of your people, they're busy. They have day jobs. They can't sit there and work their straddles or their spreads or whatever, or even their single leg orders, all the time to get the best execution. So something that can take that off their hands, that's really, really a pretty cool thing. Maybe when that single leg launches, maybe we'll devote one of our Xpress Block segments just to kind of walking our listeners through how they get to it really quick. I know they can get it in the all-in-one trade ticket. They can kind of see it in there, but maybe a really quick, here's how you do it. Here's an example. Here's how that could help you. Maybe walking them through the increments and how they work. So, because that's a pretty powerful tool. We want our listeners to be able to, use it and use it effectively, because that'll save them probably a lot of time and probably a lot of missed orders.
Yeah, and that's, one thing, especially in this space, in the e-commerce kind of discount space, and I know some people don't like to think about it that way, but one thing is a lot of people look at price and kind of focus on where they do business based on price, but another issue is time management and the ability when you've got a market that's moving. Right now you're doing a spread in Tesla and you're regrettably chasing it up or chasing it down depending on what you're trying to do, and all of a sudden you got another spread working in Groupon, or you've got a spread working in Microsoft, and you got multiple screens open and you got CNBC on and you're kind of watching things with one eye. From a time management standpoint, it's such a plus, and time is money. First time I used it was an expiration Friday, and it was like 2:50 Chicago time, and I was on a conference call, and I was probably rude, which I been guilty of many times. And I said, I got to get off the call to trade. And I literally was able to put in 2 WalkLimit orders and jump right back on the call and got really good fills, something I couldn't have done, stayed on the call, worked one order. Time management is a big, big value. So it's really cool that single leg is coming.
Yeah, I know our listener who wrote in and a lot of others will be very excited to see that coming to a single leg trade near them. Thank you for that, Alex. Really great news. Looking forward to that coming in a couple of weeks. And now we're going to keep on rolling right on into my favorite part of the show, the mail block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block.
All right, welcome to the mail block. This is, of course, the portion of the show where you guys take over and get to ask your questions and post your comments. First one came in from one of our regular listeners to the show, South Bay Trader. He goes, Trader One, I should say. He goes by on Twitter, and he wrote in a very simple question. He wrote, juice and paper. with a question mark next to them. And it kind of reminded me, we do throw these terms around quite a bit on the show. They're kind of second nature to most of us here, so we don't think to define them all the time. But we do have a lot of new listeners cycling through this show on a regular basis, and so it probably would behoove us to go back and define some of those terms. And I could do it myself, but who better than the man who is writing the book on juice? None other than Mr. Andrew Giovinazzi, to come in and regale us with some far-reaching and very, very wise, perhaps even sage-like definitions of paper and juice.
So that's what I'm going to name the book. Paper and Juice.
Paper and Juice. This book has had about 47 different titles over the past few months.
I know, but we're going to hit it. I'm actually starting an outline on it. So it'll happen maybe.
Oh, it is happening now. Okay, I was just teasing. This is the book that I endlessly tease.
It's not going to be exactly. It'll hit on that. Maybe you'll write the foreword though. Okay. For all of you who wanted to know how to do stuff and buy juice, here's the book for you.
Yes, I will say. Can I write the foreword, the paper foreword, or the juice foreword? Which one can I write?
I don't know. Whatever one you want. I think there's 5,000 books on selling options, and there's none on buying them. So
yeah, you'll have some shelf space to yourself. Yeah, there you go.
But one is paper. Okay, so we'll define paper as everybody but a liquidity provider. So paper, I always like to tell clerks or new clients, paper is the order flow that's emanating away from the exchange. That's the easiest way. So it's customer paper. It's Alex with a WalkLimit order. It is George Soros buying 5 million calls in JCPenney, whatever. That's paper. Paper is demand and supply from outside the liquidity provider community. Yeah, that's how I would define that.
For our purposes here on this show, when we talk about it a lot, it's pretty much just large, like institutional paper. People coming in, buying it. Very rarely do we say paper bought 5 calls. So
exactly. Mostly it is institutional paper because that's what's ringing our bell. But it could also be much smaller retail type paper as well. And why do they call it paper? Because in the old days, a broker would walk into your crowd with a piece of paper, and he would read off the paper, I need to buy 500 of the Jan 25 blah, blah, blah calls. And we'd all yell, sold! And we would hand him a slip of paper. He would staple it and chuck it in the bin.
All seems so crazily inefficient now, doesn't it?
It seems really inefficient now, but hell, it sounded really efficient to me back then. I just liked the little conveyor belt to see the paper go down to the pressure porter at the end. I thought that was cool.
We never had one.
Technology.
We never had one. We just had to give it to our runner. I never had a conveyor belt. I didn't have the fancy
I think
stuff.
On the board of trade, they just made the clerks run around and pick up the paper off the floor and then give it to the price reporter.
I think you're right.
That's barbaric, but yet they did it.
Give us an overview of Tasty Delicious Juice, sir.
Tasty Delicious Juice, I would describe as the extrinsic value of an option. So any option that's at the money or out of the money has juice in it. Okay, actually, it's 100% juice. It's like Florida concentrated orange juice, which unfortunately Matt will no longer be able to enjoy in Florida. He'll have to drink that Chicago concentrated orange juice. But juice is all the out of the money, the extrinsic value portion of an option. An in-the-money option can have juice in it, and most of them do. That will be the part that is, you basically take the price of the option, you subtract the intrinsic value of it, and whatever's left over, that squishy part of the option is the juice. Most of the value of that option is derived by either volatility, or as you go farther out in time, interest rates start to kick in a little bit. But most of that option value is from the whatever the forward volatility they're running in the model happens to be.
And it is, of course, tasty and delicious, hence the term.
Tasty and delicious is exactly it.
Another new title for your book. It's so many. They just keep rolling off the tongue here.
Tasty and delicious juice, I think, is not a bad title for the book.
You might get filed
in the smart way.
Yeah.
And I also want a forward from Schlesinger saying, okay,
don't do this.
if you have to buy options, I guess it might be okay for somebody else to do it this way.
Speaking of Schlesinger, we have a comment here from the website from nrlbuild. That's a great handle. And he says, I've been listening to Option Block for a couple of months now. Really enjoy the show. So first off, thank you, Mr. NRL Build. You're one of the many new listeners who come into the show. Glad you like it. He went on to say, I have been long ATVI since 2009. That's, of course, Activision. We talked about it many times on the show here, listeners. He says he got in via short puts. Wish I'd been listening to your show when you were discussing short strangles on it. I was always scared it would be called away. And that, how many times have we heard that? You know, how many times people, not gotten into the other side of the trade or done whatever, done the covered call, done the strangle because they were afraid that, their stuff would be called away. That actually, that's a good thing. It would work. And of course, right now, you're doing all right. Right now, Mr. NRL Build, Activision's up quite a bit, so you've been rewarded for your long patience. But yeah, it was a good period in there when you could have been writing strangles, doing risk reversals, writing covered calls, and done fairly well for yourself in doing it. The reason I say you mentioned Don, a reason that brought me up this question to my mind is because he goes on to ask, I really enjoy Volatility Views. I've listened to every single episode and was wondering if it was going to be returning. The VolX site seems stagnant. Unfortunately, the answer is yes and no. The Volatility Views will be returning. We are working on that right now, getting all the I's dotted and T's crossed. Hopefully, maybe even by next month, early September, if we can get everything going in time. Unfortunately, what you're seeing there is that the new product approval, new product development process in the options business is absurdly long and detailed. And for a startup like VolX, it just took too long. They ended up just running short on capital in the extreme amount of time it took to get all of those products up and ready and launched, and particularly the new stuff they were talking about with NASDAQ and the NASDAQ products. They're still around, they're still kicking, they're still working on new ideas, but it just wasn't feasible for them to be partners on the show anymore. But don't worry, VolViews will be returning hopefully with some great new ideas and some great new guests and some great new content for you, perhaps even as soon as next month. So stay tuned for that. Mr. NRL Build and all the rest of you out there who keep writing in saying, where's my VolViews, where's my VolViews? I know, Alex, you'll be very excited about that because I know you're a big fan of Mr. Schlesinger and the team over there.
One of the VolX. Smartest guys I ever met in the industry, and someone I learned a lot from, someone I continue to learn from, but I will tell you a piece of interesting industry gossip that's been kicking around, and it is gossip, so let me caveat it as such. And the gossip is that Jeff Sprecher, now that he owns the New York, the Amex, and ARCA, are developing some vol products to compete with the VIX. I personally would like to see single stock vols products traded, but I think that space could get very interesting in the next couple of years with an innovator like Sprecher in there.
Yeah, someone with some muscle behind him, some leverage. That won't certainly endear him to his friends over at the SIBO, but I'm sure he's got bigger concerns than that. But yeah, you're right. That will be interesting to see some movement in that space, aside from a legion more of ETFs that are pegged to VIX.
Oh my gosh, another growth business for Option Pit. Oh my gosh, I don't even know what to do.
There you go.
I'm convinced now I'm in the right business.
Send Mr. Sprecher a love letter.
The interesting thing about SIBO is when I was at the ISC and we kind of had a competitive intelligence effort, how do I put this delicately? We thought they were desperately trying to sell themselves to the ICE, the Atlanta ICE. And that was a story that was out there for a long time. And of course, ICE and NASDAQ made a run at the New York and its futures business, which didn't come to pass when Eurex made the run at it. But in the end, Jeff Sprecher, I'll put this in quotes, wins because he got him.
Yeah, he finally had a merger go through, and it seems to be sticking. So we'll keep an interesting eye on that space and those guys over there at ICE. And unfortunately, that's all the time we have for the mail block. But if you want to join your fellow listeners and surf on over to the website, leave us a comment, find us on Twitter, find us on Facebook, or just email us questions@theoptionsinsider.com. Lots of great ways to get in touch with us here on the show. But I'm talking really fast because we got to roll right into our final segment, Around the Block.
Around the Block.
All right, listeners, you know what time it is. It is time for Around the Block. We'll do a quick check-in here of some of the names we hit on the top of the show. Good old Dendrion seems to have bounced off that 4 handle and seems to be hanging around the 406, 407 level. We'll see if it opens up lower, below the 4 handle, or higher. I know there was a lot of activity going in on those 4 puts before the close today, so maybe that might keep it elevated a little bit slightly above that strike. We'll have to see. And NVIDIA, let's see, also hovering slightly lower, about 14.5 or so in the after hours right now. So it looks like if you were a premium seller out in NVIDIA, not too much movement. Seems like it may be working out for you. Mr. Andrew, what are you watching here? What's catching your eye for the rest of this week into the weekend?
We've been looking at, again, VIX, thinking if we might be able to make some. I think the market responded well, so if VIX possibly can make some new, at least touching the lows. Watching Priceline for tomorrow. We had some people with some interesting trades on in there. JCPenney, Facebook. And again, I'm still my closet eyeball on the emerging markets. If they get past this taper thing in any kind of form, I think could be a nice long-term thing. So Priceline for sure up $50 again. You sold the straddle, you lost, or I think you got lucky if you broke even. So as usual, Priceline has been the straddle. What is he's the negotiator?
The Priceline negotiator, yeah.
Destroyer. He's the straddle destroyer.
Yes.
Because if you sell him, you get killed.
That gets into that narrative people have said before about, the premium stocks, the 100 plus or even higher, they tend to be the ones that typically the straddle is underpriced, which is kind of counterintuitive, I think, to a lot of listeners. But this certainly plays into that narrative versus NVIDIA, $14 and underperforming on their straddle. So, yeah, if you're out there blasting away at straddle, still on Priceline after all the stuff that's happened out there, I think you kind of know what you're in for at this point.
Yep. Yeah, we came up with a new top secret. That's actually not a new strategy, but actually one of our clients came up with a pretty interesting way to trade it. Buying very, very out of the money flies in like with a week to go on some of these things that have these big moves. So the dollars you spend actually are fractional, tiny. It would be like something you would like a rip up type money, but it's a different way to trade it. Whereas as you sell a lot of iron condors. And a bunch of them blow up and hopefully you make some money on this. You sell a lot, you buy a lot of things for little tiny prices, and then 1 or 3 of them, really become a big winner. So mostly going on the assumption that these stocks are going to move up or down quite a bit on these earnings. So slightly different way to go about it.
We'll have to delve into it in more detail on a forthcoming show. Mr. Alex, what is catching your eye for the rest of this week, sir?
Keeping an eye on the 10-year. No earnings the rest of the week. Cisco next week. And the folks in Washington are on vacation, so the market has a chance. But they will be back in September, and that's going to start to become worrisome. I think we're going to grind here for a little while in this area. And I think we'll be driven by the 10-year. And then it gets scary in September when our elected officials return.
Good to see our deeply held cynicism is infecting you as well, Alex. And last but not least, Mr. Matthew, what in the futures and commodity realm are you watching for the rest of this week into the weekend?
Seeing if the ags can find a bottom. Corn, soybeans, and wheat beans caught a bid today. You have a USDA report on Monday, so it'll be interesting to see how some of the funds are positioned into Monday's USDA. With recent rally in gold and silver here the last couple of days, you're butting up against the 50-day moving average, so I view that as a pretty big pivot point in gold and silver. I mentioned the coffee market. The forecast is for a freeze on Sunday, so that should make Monday's trading interesting. We had a false alarm here in the middle of July. We'll see how that happens. I'm going to make a bold call and say the low today in natural gas is we won't see this level again for the rest of the year. And also, I'll be interested to see if oil can get under $100 here in the next couple weeks.
I like it, sir. Bold, bold calls. We'll have to keep an eye on Nat Gas to see how that unfolds in the weeks and months to come. And, of course, welcome yet again to your impending arrival here in Chicago. And before we go, let me check in really quickly with each of my cohorts, my partners in crime, to see what they have cooking in their necks of the woods that may interest you, the listener. Mr. Andrew, we'll start with you. What is cooking in the land of the pit, aside from some interesting out-of-the-money fly strategies?
What do we got? We are starting a new platinum course, starts in September. And what it does is, if you like kind of the stuff that we do, it is basically an advanced option trading and strategy workshop, trying to answer all those questions that a lot of our clients have had. So you have to take the gold course first at Option Pit. We don't let anybody take it afterward because it would slow down all the people who have spent time with us already that are kind of looking to get to the next level. So we will be launching that after September. I think we have one slot for the September class. Mark has done his normal job of getting the word out to all our early people. And it's a 3-month long class. We meet once a week. So that will be launching in the end of, actually right after Labor Day. And that's kind of our big event, unless Mark has something on, RCM Thursdays that I don't know about. As far as I know, that's what we got going on.
All right, speaking of RCM Thursdays, Mr. Matt, let our listeners know once again where they can find your great newsletters and all the other great futures content you guys have cooking over there at RCM.
Yeah, absolutely. If you go to our website, RCM Futures, you can request my research, and then there's 2 other of my colleagues that write research as well. Kevin Babbitt writes couple pieces a day. Doug Bergman writes some stuff on agriculture every day, right on our website, rcmfutures.com.
All right, thank you for that. And last but certainly not least, Mr. Alex, what's cooking in the land of OX education?
Just showcase a couple webinars Monday after the close, advanced order types, and obviously we'll be focusing on WalkLimit. Tuesday, doing a couple evening seminars. 7:30, we're doing a platform tour showing the features of the platform, the new streaming charts, and a little touch on WalkLimit. And an hour later, we're doing long calls for folks that are novices as an introduction into the option market. On Wednesday, the 13th, Peter Lusk from the SIBO is joining us to talk about volatility at a 1 p.m. presentation. So always a full schedule of webinars here at Options Express.
All right, thank you for that, Mr. Alex. And on behalf of Alex and Andrew and Mr. Matthew and, of course, myself, I want to thank all of you out there for downloading and streaming and subscribing to this show and to all the programs on our great Options Insider Radio Network. Keep it up. We love it, and we hope you love it too. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting, and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.